return. So in earnings of $3,980 as to 7th of March, on outlay of $6,490, I reached 61% profit. Over 5 months, that's about 12% per month. That's his trade. He put it here. So he sent us and specific how much, when he allocated, what he did, and everything. Very specific trade. That's another result. We've done it with the club. So new skin, we bought it $35.30. That's the rent which we collected. $2.65. That's the last price. Okay. Now we are going to sell it below the price we purchased, $35.30, and we agreed to sell it at $35. So, but because we collected $2.65, it's still profitable. Our profit for that month was 65%. So if you put $100,000, it will be 6.65. Okay, that's we purchased it in December until January. So it's 1 month. It's actually 12th of December, so just a bit more than 1 month. Okay. Now remember, another thing that we brought our break-even price because we paid $35.20. We collected $2.65, so our break-even is $32.65. So if it goes below that, we have capital loss. If it is above that, we kind of fine. Okay. Now what happened? The price went to $31.71. Okay. So what did we do? We sell the call. This case we got $1.33. We didn't get $2.65, but our investment outlay was already $32 because we collected $2.65. Now it generated 4%. So it wasn't 6%, but 4% is still good. Like imagine if you put $100,000, $4,000 profit, still pretty good, right? Now our break-even price dropped down straight away to $31.32. The price at that stage was $31.72. So we're already in profit, even capital profit on that stuff. Despite the share price dropped, what? More than 15%. Like a bit more than 10%, between 10 and 15%, the drop of the price. We're still in profit. Isn't it great? Right? So then what happened? Third month. Before the expiration Friday, the share price was below $35. We weren't called out. So after that, we saw that the share price moved, and around $36, $38, it was kind of, we could see the resistance level on our technical analysis. So what we did, we sold $38 strike price. So we chose higher, okay? And we collected $1.55 in this case. So it's 4.95 premium on options, and we brought our average price to $29.77. So at that time, New Skin moved up, and our shares were taken from us. By the way, New Skin now is about $47. So we could sit on that from value perspective, and we can make a lot of money as well. But we wanted to collect money regardless if the share price moves up or down. And it can still go back to $38 level, and we can buy it. So in total, we sold at $38. Our break-even was $29.97. We generated $8.23 for 3 months. Divided 23%. Capital plus options plus dividends. Dividends like wasn't significant, so at once we got dividends. So that's the profit. That's the real case example as well. When the share price doesn't go up straight away, it's actually okay. 10 minutes. So that's actually what the trend. So we bought it here, and then it went up, then it went down even lower, and we still keep renting it, and here it was called out. That's New Skin. That's another one I was telling you about Russia and sanctions. Absolutely amazing situation. Company, who knows Yandex? Yandex is Google, Russian Google.
Okay.
It's a huge company within Russia. It actually includes itself Uber, because it has Yandex Taxi, similar structure absolutely. It has PayPal, Yandex Money, similar structure, and then Google on the top of it. So it has more businesses than Google itself. Google went to Russian market, cannot kick the Yandex from the market. Yandex is dominate on the post-Soviet Union area. Now what happened after sanctions were imposed towards Russia, the share price collapsed. 3 months prior to sanctions be lifted, the share price start moving up. That's the first time. Sanctions here will continue for another 6 months. Again, 3 months prior sanctions to be lifted, share price start moving up. Another 45% move. Then sanctions again were continued, share price collapsed again. And again, 3 months prior to sanctions to be lifted, share price moved again. At the moment, they kind of don't talk because all this hassle with Britain and everything. It's not clear if they're going to lift the sanctions or not. So share price is around $22. If they continue sanctions, share price will collapse, will buy again on a low. So that's how simple. Company is fantastic. For this time, she was growing 30% every year after year on their revenue, sales, and etc. etc. So that's how we make. That's a screenshot. You can see here. That's the average price. Again, new skin $32. The person bought it 100 shares in Yandex at $12.65. And when the screenshot was taken, the new skin was $38 and Yandex was $19. The total profit $3,000. So if you count this, it's about $8,000 investment and $3,000 profit. 2 months. That's value investing. It's not options here. Okay, but options on the top of that if you do it. So everyone is choosing the strategy. So guys, results. You can get up to 200% on the growth, like with Yandex here. 60% if you get 5% on a monthly basis from options, and dividends as bonus. Okay, so homework for you. See what the amount of money you have on your account, and just try to understand how much money you can make. And see, okay, for yourself. Conclusion: stock market isn't lottery. It's a precise work. When you understand, you buy. Okay, if you don't understand something, stay away from that. That's the important part of the stock market. You need to plan your action in advance. You need to know how much money you're going to generate from each trade before you go into this trade. Okay, patience is rewarded. Now.